Hello and welcome to this Forex Preview at XM.com. We'll be discussing the upcoming Bank of Japan meeting and the potential reaction in the yen. I'm Maria Pachardis, and joining me is investment analyst Christina Barthenidu. So Christina, recently the Bank of Canada surprisingly delivered a massive 100 basis points rate hike. Investors got worried that the Fed would follow suit this month after the latest spike in inflation, although last week several policymakers talked down the case of that happening. The Bank of Japan, on the other hand, has remained a dovish outlier despite the huge depreciation in the yen. Do you think the Bank of Japan could finally change sides on Thursday, given that its peers are well ahead in their monetary tightening cycle?
Hi, Maria. Indeed, questions are growing about when the central bank, when the Bank of Japan will finally abandon its super accommodative monetary policy, as other central banks are moving aggressively in their rate hike cycle to cool inflation, which is still not showing any convincing signs of peaking. However, the latest comments from the Bank of Japan have been clear enough to suggest that the central bank is not thinking to make any changes, but it's rather willing to make it even more accommodative. And I think that it will keep that promise and stick to that plan this week as well, because besides the struggle to maintain its yield curve control, fundamentally it has no other good reasoning to excuse a tighter monetary policy. I mean, if we look at Japan's economy, inflation there is still has been barely moving above the central bank's 2% threshold over the past few months. Inflation expectations have been also slightly above that target over the past few months. Therefore, I don't think that inflation could be a good reasoning to change policy. Also, if you look at other economic indicators, household spending has been diminishing. Imports have been rising faster than exports, reaching the highest growth since 1980s recently, despite the huge depreciation in the yen, which has significantly boosted production expenses. That also suggests that businesses will be less willing to raise wages in the coming months. Therefore, I think that it's not the right timing for the Bank of Japan to abandon its accommodative monetary policy. Instead, it might change its economic projections for now and wisely wait to see how recession risks will adjust in the coming months. It wouldn't be really wise if it starts the tightening phase, but then suddenly in a few months undo its tightening changes. Therefore, that wouldn't be good for its credibility as well. Therefore, it might wait a bit longer and see whether the negative global risks will become more serious, making investors shift funds towards safe haven assets such as the yen. If those risks appear less concerning, it might finally tweak its policy and following the devastating assassination of the former prime minister, who was a strong supporter of an accommodative monetary policy and generally still had an impact in policies, according to reports. Despite his resignation, I think the new prime minister might be more willing to call for a tighter policy in the year ahead.
And how do you think the yen will react to the central bank's policy decision?
Well, unless the central bank suddenly abandons its yield curve control and becomes more concerned about the fall in the yen, I think the Japanese currency will not gain much from this week's policy announcement and will probably remain under dollar's control. Technically, it might erase some of its latest losses following last week's sell-off. The 20-day moving average around 136.68 is still supporting dollar-yen, while the broad uptrend is well intact above the 50-day moving average, just below the 133 level. Therefore, any downside corrections in dollar-yen may not be a big worry for now, as long as those levels keep strong footing under the price.
Christina, thanks so much. And thanks for joining us at XM.com.